Well, hey there, CEO. Now, in this week's podcast, episode 185, we covered 3 strategies for taking control of your summer cash flow before summer arrives. Now, after I recorded that episode, I kept thinking about the strategy that I know trips people up the most, which is strategy number 2, actually building a financial buffer before you actually need it. Now, because the concept makes sense, the practical question is always, okay, but how do you actually do this? So today I'm going to walk you through the summer cash flow planning worksheet, specifically section number 2 on buffer building, and show you what this looks like in real early childhood business. For example, I want to walk you through our summer financial planning. Now, the summer cash flow planning worksheet has 3 main sections. And today, again, we're focused on section number 2, your summer buffer plan. So the first thing section 2 asks you to do is write down your monthly cash floor. That's the number you calculated in section 1, your total fixed monthly expenses. Write that in the box here. Now, don't estimate, look it up. This number is your anchor. Make sure you know what this number is. Next, the worksheet asks you to calculate your 6-week buffer target. Now, that formula is simple. Take your monthly cash floor, then multiply it by 1.5. So for example, if your monthly expenses are $12,000, then your buffer target is $18,000. Now write that number in your box. This is what you're working towards. Now the third part of this section is your buffer funding plan. Now the worksheet gives you 3 columns: your current balance in any reserve account, your targeted amount, and your gap. So then below that, you will see 3 rows for the 3 buffer building approaches that we talked about in the episode. So the spring enrollment reserve, deposit leverage, and the CEO profit spotlight approach. Check which one of those levers applies to your business, and then write your specific plan for each one that you choose. Now, the most important thing here is not the amount, it's the structure. So when you have a named separate account for your summer reserve, even a small one, your brain treats summer differently. It stops being a threat and starts being a planned expense. So again, if you don't want to set up a separate account completely, at least put it in your tax and emergency fund. So those of you in our Clarity Collective or our Peace and Profit Society, you know about our Profit First methodology and how we talk about your different bank accounts. That would go into your tax and emergency fund. Now, at Play Boutique and Peak Academy, our summer looks very different from our school year revenue, especially at Play Boutique. Our birthday party bookings, for example, they change. Our drop-in play patterns, they shift. For us during the summer, families travel more. They like to be outside. In the Pacific Northwest, June, July, and August are some of the most beautiful months that we have, and most people don't want to be inside. So for the first couple summers that I operated, man, I white knuckled it. I did not know how I was going to make it. I checked the bank balance consistently and I tried to figure out what was happening. Then there was a summer that changed everything. And that was the year I built our first seasonal financial roadmap, and I set specific buffer targets. And I did that after I built our revenue roadmap. So then I had our revenue roadmap, which I knew which revenue was coming in. Then around March or April, I started working on my summer gap. Now, we weren't able to fully fund that buffer that first year, but having the target, wow, and the account, that changed how I moved through the season. So instead of reacting to every low week, I was measuring against a plan. I knew how much money I had. I knew how much money I had to spend, and I had to spread it out a little bit, but it wasn't as stressful as those first few years where I was looking at basically nothing in the bank. So by the 3rd year, we hit our buffer target by April 30th for the first time. And that summer, wow, I didn't check that bank balance with anxiety at all. I checked it with context. And that's what the plan does for you. So for the full 3-strategy framework, including that mid-year cash flow reality check and the revenue stabilization plan, go listen to episode 185 of the Early Childhood Business Made Easy podcast. Download the summer cash flow planning worksheet at kellypeak.com. Again, episode 185. It's new, it's free, and it's built specifically for early childhood business operators like yourself. Remember, we are here to rewrite the rules of business. Take care, my friend, and have a great week.